The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. Appreciate you starting your trading day off with me. We got markets kicking things off, barely in the red right now. A little bit of a sell-off from some lofty levels yesterday. You had Apple selling off a bit on their Worldwide Developer Conference, pushing out a new mixed reality headset for about $3,500. Seems to be pretty cool. But that's a lot for a first-generation product, folks, because usually you push out that first-generation product, the next generation, and even the one after that really improve. We see it in the Apple, on the iPhone, right? You think about the major differences early on in the iPhone, man. You were coming out with different generations of the product that were radically changing what it could do, and the technology within them probably going to happen with the headset. So you buy the first one for $3,500. Was reading something this morning, even talked about, as we digress on Apple a bit to kick things off, a little bit higher prices this morning as we get the market barely in the red. But you see the sell-off yesterday, man. You're talking about $7 of sell-off, folks. $7 of sell-off for a company that has almost 16 billion shares outstanding. That's about $100 billion in market cap that Apple just gave up from yesterday afternoon to the close. They've gotten back about $32 billion this morning. You see the volatility. But point being, first generation, right, pushing it out for $3,500. They've even talked about by the time it ships, I was reading a couple of reviews of some journalists that got to check out the Apple. One, I think, was from the Journal, another one somewhere else. They were at the event. They're basically shuttled to a little room. They get to use the product, no pictures of them using it or anything like that. And then they get to tell their readers or viewers about it. And one of the things they said is that it felt a little bit heavy after an extended period of time, something like that, right? They could feel it on their nose. They could feel it on their forehead. Apple was saying it wasn't adjusted perfectly to fit their face. Of course, they'd say something like that. But the one thing I found interesting is that they said by the time that it ships in the beginning of next year, okay, so you're talking about 7 months from right now, it's actually going to feel even better. So they are not done making that product yet. Even by the time the first generation product ships, it's going to be better than the product that they showed journalists yesterday. So that's a lot of money for the first generation, man. It seems pretty cool. But nonetheless, Apple sells off. We're trading at 180 on the dot right now. Markets, as I mentioned, barely in the red. NASDAQ 100, you're down by 12. The Dow is off 26 this morning. You got the Russell off by 2. Bitcoin. Yesterday was Binance. Today is Coinbase. Interesting, they went Binance first yesterday, Coinbase today. I was thinking as in the SEC is going after Coinbase. We jump over to Coinbase. Not surprising, folks, okay? This stock, I mean, if you were in this thing yesterday, I would have said maybe you should be getting out. Didn't cover it on the program, so hindsight is 20/20, right? But I've talked about many times, if you wanted action in Bitcoin, I would get action in Bitcoin versus getting action in Coinbase. And you're going to open today at about $47, which this equity was trading at January 16th, right? You're pretty much at the doldrums. You did get down to $31 there. Bitcoin, only down $125. You're trading at $25,000 right now. Absolutely remarkable. Do you know when Coinbase went public, folks? I believe it was April 12th, the week of. Let's see if it backs it up. It was one of the spikes. April 12th, okay? Remarkable when you look at that, man. You ever want to talk about you learn something from the market, man? Never forget where Bitcoin was, where Coinbase was when they pushed out Coinbase to the public and it went to $430, okay? You got the spike high in Bitcoin. You got a nice double top as Bitcoin accelerated actually back above that level. And then, boy, that was really the writing on the wall. And the market sold off as well, for all fairness. You know, you talk about growth stocks. There might be no greater growth stock than digital money and the exchanges that operate therein. Coinbase at the beginning of 2021 was trading at $250. Well, growth stocks have climbed it back, man. There is no correlation left between Bitcoin and the NASDAQ 100, especially when you got the SEC dropping the hammer in a big way. So Coinbase sued by the SEC for breaking U.S. securities rules. Regulator suit comes a day after Binance. Interesting, right? I wonder how that conversation went in terms of saying, should we go after Binance or Coinbase first? Because they had both of them ready, man. This doesn't happen overnight. They push out the report on Binance yesterday, Coinbase today. Maybe they were worried about if they pushed out Coinbase first, that Binance would know they were coming after them, and so they might give them time. Maybe why don't they come out at the same time? Either way, the SEC sued Coinbase in federal court today, alleging the crypto firm for years broke its rules. 101-page complaint. The Binance one, I think, was like 120-something pages. Evaded regulations by letting users trade numerous crypto tokens that were actually unregistered securities. Okay. We allege that Coinbase, despite being subject to the securities laws, commingled and unlawfully offered exchange, broker-dealer, and clearinghouse functions. I mean, they're coming after him for everything, man. They also accused Coinbase on Tuesday of breaking the industry's rules with its staking service. That one's been a lot more prevalent in terms of being talked about. In terms of that product, lets the customers turn over their crypto tokens to facilitate transactions on a blockchain, which then pays a return to the customer. This is where things really got out of whack with some of those exchanges, right, where they would offer you astronomical yields on your crypto, almost indicative like it was a scam, and it ended up being a scam on those exchanges. Bitcoin's going to be around forever, man, and the blockchain is going to change things forever. But be careful of these centralized exchanges, and be careful being a shareholder, man, because I talked about it. Once Coinbase had the verbiage in their material statements coming out, folks, saying, listen, you could be a general creditor with money in Coinbase, something to that tune. Why would you be trusting that, man? Why would you be trusting anybody with crypto if you really believed in it and you were a long-term holder? Get it yourself, put it in a dark wallet, hold everything yourself off of the internet, and that's what you do. I don't understand how to do all that stuff, but if I was going to hold a position, anything north of a couple $100 probably, I would pursue that. And we'll have to get a program together, and maybe I will, because if I don't know about it, I'm sure there's plenty of people that don't know about it out here. And I guarantee you, just from reading enough, that there are many avenues that as novices, right, you can get your crypto, put it in a hard wallet, get it off the internet. You're the one that controls it. Because I wouldn't even trust my money in Coinbase, and I have used Coinbase before, folks. I play online poker. Since I had Tommy, my time is strapped. Haven't played much of it, especially online, if any, really. But in a previous lifetime, many years ago, I played a lot of online poker, and there are unregulated offshore sites that operate with crypto as their deposit and withdrawal methods, right? So what you would do is I would go to Coinbase, I would purchase Bitcoin, I would then take that Bitcoin, transfer it to the offshore unregulated poker site, much like these offshore unregulated Bitcoin exchanges. Okay, so I got a quick lesson of, do you trust these people with your money? And so I was using that, and then it would go to the site would get the Bitcoin, they would credit me the dollars. So I had very little crypto exposure. But I would not keep money at this time on Coinbase. There's no reason to. That's just as simple. There's no reason. The risk does not, the reward, I should say, does not outweigh the risk. All right, we're coming back. We're talking equities. We're talking to our man, Kevin Hincks. Don't go away, folks. We'll be right back.
We have exciting news, Tigers. This June, Tim Ord of the Ord Oracle will be hosting 2 webinars providing insight into his renowned market timing methodologies. On June 8th, Tim will delve into the S&P 500, teaching sentiment indicators, identifying market bottoms and divergence, and so much more. On June 15th, Tim pivots to the gold market, taking a look at cycle analysis, ratio studies, advanced decline indicators, and other important tools for analyzing this sector. Sign up today on TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. Welcome back, folks. We got the markets barely in the red. S&P futures right now, you're negative by about 2 points, trading at 42.78. You get the Dow off 27, the Russell off about 2 points, and NASDAQ 100 off by 8 right now. Let's jump over to our man, Kevin Hincks. Every trading day, folks, 12 noon Eastern time from the TD Ameritrade Network, Fast Market with your host, Kevin Hincks, Tom White. They got an outstanding lineup of guests. They walk you through hypothetical trade setups, talking about options. Usually they walk through about 3 hypotheticals a program. Kevin Hincks, what do you think of this market action? Good morning, man.
Good morning, Tommy O'Brien. You know, there's no economic data today. There's no significant earnings today. We're in the Fed quiet period today. So there's not a lot going on, actually. You know, we've been talking a lot this week, Tommy, about this magnificent 7. Apple, Microsoft, Google Alphabet, Meta, Amazon, Tesla, NVIDIA. And we're going through those stocks this week to go over them and see how far they've run. And they're every one of those, except Apple that rallied yesterday and then broke lower late in the day, is still in overbought territory, Tommy. So that's what we've been covering on the show yesterday, and we're going to cover them today, except we're going to pivot a bit, like Folio is going to cover Coinbase today, just because there's such big news coming out on these stocks that we're going to cover Coinbase today, but we'll also trade Microsoft and we'll also trade Google Alphabet. So a lot going on the show today with trading these magnificent 7 names that we talked about, but throwing in a little Coinbase too, because that's a pretty big story on a relatively quiet day for the markets, Tommy.
I spent a lot of time in the beginning of the program, don't normally on crypto, and you have to on Coinbase, man, going over and absolutely remarkable, Kevin, in a history lesson, lining up the chart, I think, this is me, of where Bitcoin went to, that first acceleration to 65,000 and change, literally the week that they pushed Coinbase out to the public, trading at $430. And here we are years later, and Coinbase getting investigated by the SEC. And interesting how it was Binance yesterday, Coinbase today. And I imagine that is a shift of things to come. But yes, I look forward to that discussion. We got Coinbase up here in the Thinkorswim platform, trading right now at $46, down from $58.70 yesterday. Back to your Magnificent 7. What do you think of the general discussion, Kevin, of is this good for the market, that all the gains are coming from these companies that are on the forefront of technology, the biggest companies out there. Apple hit a new market cap high just yesterday as they pushed out their new mixed reality headset. Just generally, because that's a big conversation. I know the listeners hear it. Is that risky, having all the concentration in all the gains, as we're pushing 20% up from the lows yesterday as well in those 7 stocks that you guys are covering this week?
Yeah, Tommy, I think when you look at a rally or a bull market, you want confirmation from a widespread number of participants, right? That's what gives you the confirmation. Well, we really don't have that in this market, although you can make a case that Friday's trade was a nice little confirmation where the 3 other indices rallied stronger than the NASDAQ did. Now, yesterday we were back to the old, where 3 of the indices were down. The NASDAQ was hanging in there for most of the day. So this market's trying to figure out, are the other 3 indices going to catch up to the NASDAQ, or is the NASDAQ and the market going to come back down to each other? But such little leadership, such small breath in the stocks that have rallied can't be sustained. One thing has to move or another. Either the other stocks have to come up to their level, or they've got to come back down, Tommy. So, it's kind of interesting how this plays out, but we're in very interesting markets, Tommy.
You make great points, man. I asked the question because even when you look at just Apple and Microsoft, and Google's a great one, because I love the dichotomy in Google, Kevin, or Alphabet right now with, they have the deceleration potentially of their monopoly in search, and at the same time, I think YouTube is the most phenomenal product out there that is growing. So that's kind of cool on the Google aspect. But just Apple and Microsoft, the numbers that you're talking about this year alone, for you talking about overbought and these companies, because what I look at myself when I look at the market in terms of how these companies can carry it, you're talking about Apple, man. Apple is pushing, Kevin, at almost $1 trillion in market cap this year alone. And it's June. They got 16 billion shares outstanding, and this thing just traded up $60? And Microsoft, I think, is somewhere around 800 billion. So I was saying sarcastically yesterday, Kevin, is Apple going to add another $1 trillion to their market cap in the next 6 months? As we know, anything's possible, but man, that seems like a tough go around if the other companies don't pick up some of that slack. And what do you think about Microsoft, man? You guys will be talking about them. We're pushing near the all-time highs. We're at 336 today. The all-time highs are 349. What do you think of Microsoft right now at these levels as they try and take some of that market share away from Google potentially with everything else they have going on?
Yeah, it's amazing that we look at a stock like Microsoft and we look about opportunity that they have, right? You would think they would be the people, they would be the company that other firms would go after, yet they continue to compete with the Google Alphabets of the world and the ChatGPT and OpenAI. They're competing at the highest level. Think about this, Tommy, how crazy right now AI is and everything about AI. Well, remember, they put money into OpenAI, into ChatGPT in 2019. They started investing. So talk about being ahead of the curve and seeing the future. Microsoft has done an unbelievable job. It looks like, the highly controversial buy of Activision Blizzard now it's starting to lean towards acceptance, right? So, Microsoft just likes to get into businesses and they like to win once they get there. And so, boy, it's a tough stock to fade here. The stock's up pre-market already about, let's say 35 or 40 cents pre-market. It's higher. This is one that currently, let's see, it's a 72 on the RSI pre-market, so that's currently in the overbought camp. So we'll see how it trades. But, Tommy, a lot to talk about today. A lot of these stocks have run such a long way.
Yeah, it's so cool when you get these types of accelerations because the future is bright, as we know. But, boy, there's a lot of brightness factored into some of these equity prices, man. When you talk about Apple adding almost $1 trillion over the 5-month period and Microsoft adding, 800 billion. Crazy numbers. Kevin, I appreciate the time as always, man. We look forward to the program, discussing some of those magnificent 7 today, and we'll talk to you tomorrow, man.
Have a great day, Tommy. Thanks for having me on.
Always a pleasure. Folks, check it out. And, yeah, Coinbase, man, right? They'll be talking about Coinbase in that first segment, $46. And boy, I'd be careful. And boy, you know, that's one for the history books, folks. There's your acceleration to 429. The first week they go public, they got a second lift in November as Bitcoin actually accelerated above that price point. What Bitcoin hit? Almost 70,000, I think. Let's pull it up here on the Thinkorswim platform. Yeah, 69,355. That's when you got the second acceleration in Coinbase. Now, what's interesting here is, though, right? If you were just trading Bitcoin, you get in at the spike high, you're in at 70,000. Well, yeah, you've lost a substantial amount of your money, but nothing like what you would have lost if you were in Coinbase at the high. Nothing. Okay, so be careful in Coinbase, man. You want some action, you want some crypto action. The moves are plenty fast and furious enough in Bitcoin without the exposure to an SEC investigation. So that's going to hit Bitcoin as well, but check it out. Only down $140 today on the Coinbase SEC. We'll come back for the open. Stay tuned, folks.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You got a little bit of negative action on the open as we trade down. S&P's off about 6 points. NASDAQ 100 off by 38 points. We get the Dow off by 16. The Russell off by 4. We jump around to the dollar index this morning. You got the dollar index trading back to the highs of yesterday. 104.24 right now. We were at about a 104 handle yesterday. We jump over to the gold contract right now. Gold trading at 1980. Somewhat in a range here. You really back this thing up, man. to a 5-year weekly, right? We got a few highs. We're pushing the higher boundary line of about 2066 or so. We made it to 2089 in 2020? Yeah, right after the start of the pandemic. We got back right at that level 2078 last year, and we just traded up to a high of 2085. Lower boundary at about 1700. See where gold goes. We jump to notes and bonds. Pretty tame action. You get the 10-year within one tick, back to a short-term time frame. We were higher. We're back to basically where we closed out yesterday's session at 113.27 on the 10-year. And let's talk a little bit of equities. Let's talk a little bit of bull market. This is an opinion piece over at Bloomberg, okay? But we're talking about 20%. And yesterday, you had the S&P up 20% from the lows. Didn't even realize that until the end of the day. That's from the October low. As I was just talking about with Kevin, they're talking about some of those mega cap tech firms, the Magnificent Seven. Is the market too reliant on that handful of equities? And one of the things that this article makes is that it's an arbitrary cutoff, and in practice, it's not helpful. It's true the S&P 500 on Monday extended a rally that placed the gauge on the cusp of that bull market milestone at one point in the session, jumping 20% from its October low. That sell-off brought it back below that level. But what difference does it make? This goes back to 1930 to 1939, and it marks every time you went up and down 20%. And yeah, we got a lot of 20% in there, folks. That's how the market moves. You have big swings in the market. It's been a while. 236 days since we've been there. Unusual for the stock market to go back to its low after levitating above it this long. That's how long it's been from the October low, 236 days. Yeah, and you have how long trading days to the bottom, drop in percentage. 1929 was a tough one, 86% pullback. But yeah, so we'll see where we go. We are far ways from the low now, and you're talking about the better part of 236 days. That is an extended period of time, to put it lightly. All right, what else we got going on? We had our man Duffy in the den talking about interest-only loans. And yeah, this is quite an article from the Journal, man, out this morning. Interest-only loans helped commercial property boom. Now they're coming due, and nobody can pay for them. That's my added commentary. Landlords are going to face a $1.5 trillion bill for commercial mortgages over the next 3 years. And if rates are anywhere where they're at right now, very few people are going to be willing to refinance at those levels, especially when you factor in they're going from interest-only loans that have no equity in them whatsoever, and you've had those properties pull back substantially in value. Over the next 3 years, $1.5 trillion in commercial mortgages are coming due, and this is one of the kickers that Duffy posted in the den. Unlike most home loans, which gets paid down each year, many commercial mortgages are known as interest-only loans. Borrowers make only interest payments during the life of the loan, with the entire principal due at the end. Interest-only loans as a share of new commercial mortgage-backed securities issuance increased to 88% in 2021, up from 51% in 2013. And it's even starker than that, man, because that's the one they used. They should have said up from 17% in 2010. Okay? 88% of commercial mortgage-backed securities issuance is interest-only loans, up from marginal levels coming into the acceleration from 2010, 11, 12, 13, 14, 15, and 16. You were stuck around 65%. Still a substantial increase to go from 65% to almost 90%, right? But what was happening? Well, you had real estate prices going up. Pretty interesting you had it happening during the pandemic, because commercial mortgage-backed securities during the pandemic, everybody was already out of the office buildings. Maybe they thought they were going to come back when the lockdowns ended and the world changed forever, but still pushing out interest-only loans. The combination of these forces is weighing on building values, shrinking the amount owners can borrow against their properties, and increasing the risk of default. Now, you want to see some scary numbers, man? Talk about the people that may go default here. Fitch Ratings recently estimated that 35% of pooled securitized commercial mortgages coming due just this year won't be able to refinance based on current interest rates and the property's incomes and values. It's a double banger, right? Interest rates are much higher. Property values are much lower. you don't even have the equity that you need to make it worth your while to refinance. Many malls and hotels face high default risks. The situation is particularly dire for office owners. And here's one kicker. You have a managing director of data company CoStar's risk analytics team, Xiaojing Li, estimates that as much as 83% of outstanding securitized office loans won't be able to refinance if interest rates stay at current levels. 83% of outstanding securitized office loans. Now, maybe that's the reason why the Fed is crossing their fingers and pausing/skipping a week from tomorrow, because I imagine that they are well aware that, number one, okay, it brings it to fruition in terms of the risks that are present. It could also hit regional and community banks that are heavily exposed to the sector, forcing them to write down the value of commercial mortgages on their books and set aside more cash to cover for losses, therefore weakening their balance sheet at a time that they've already been weakened by interest rate risk to some degree. They are having to pay more for certificate of deposits, as in pushing out that money to draw in capital to shore up their balance sheet. They have to pay more. And yeah, it's a tough one, man. Interest-only loans became more common in the middle of the past decade. This is a gentleman, Rich Hill, not the Red Sox pitcher from Milton, Massachusetts, a different Rich Hill. Head of real estate strategy and research and investment manager Cohen and Steers. Following the Dodd-Frank Act and under pressure from regulators to cut back on risk, many banks reduced the size of commercial mortgages they issued, shied away from riskier construction projects. But what did they do? But at the same time, as a concession, they started handing out more interest-only loans. And yeah, they talk about that it basically accelerated from a level between 2013 and 2020. And they put it in as plain a terms as you can. Property owners were able to spend less of their cash. That boosted profits during good times. In a world where you think property valuations are rising, you want to use as much of someone else's money as possible to finance your project. Well, guess what? Property values are plummeting, especially for office buildings, at the same time that you have risk skyrocketing. And yeah, you have people that are going to come due and they're not going to refinance those and they're just going to default. The banks are going to have to get them and then the banks are just going to sell them off, therefore weakening those values even further. And it's a vicious cycle. Take Center Square, 1.8 million square foot office complex in Philly, home to close to Villanova University, my alma mater. 2009, $68 million balloon mortgage. Yeah, when the mortgage came due, December, they couldn't pay it off. Stay tuned, folks. We're coming back.
We have exciting news, Tigers. This June, Tim Ord of the Ord Oracle will be hosting 2 webinars providing insight into his renowned market timing methodologies. On June 8th, Tim will delve into the S&P 500, teaching sentiment indicators, identifying market bottoms and divergence, and so much more. On June 15th, Tim pivots to the gold market, taking a look at cycle analysis, ratio studies, advanced decline indicators, and other important tools for analyzing this sector. Sign up today on TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report.
Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&P right now negative by about 7 points, trading at 4273. You get the NASDAQ 100 down about 0.3%, off 54 points. Dow off about 0.2%. You get the Russell catching a bit, up by 6 points right now, positive by 1/3% at 1815. We jump over to that dollar index, continuing to inch a little bit higher, 104.32, basically near the highs of yesterday morning on the dollar index. We jump to some of the FANG stocks. Let's see how Apple is doing today. Not that great. Down another percent. Interesting, man. So yeah, as I mentioned, you give up about $7 from the highs yesterday, and so much for $3 trillion because they just, now we got what? You're talking about, jump over to the Analyze tab, the fundamentals. Yeah, you're at 2.8. You were at about 2.9, but that's what happens when you give up $100 billion in market cap in a period of less than 24 hours. Absolutely remarkable how it's moving there. All right, what else do we got pulled up? We got our man Tim Ord. 2 days from today, folks, Thursday, okay? This Thursday, June 8th, Tim Ord is hosting an S&P trading webinar for methodology, okay? You can see what he's going to be talking about. You click on the link on the front page of TFNN. You can attend this webinar for $295 in the S&P. He's going to be talking about sentiment indicators. And, listen, he was on my dad's show yesterday afternoon. If you checked it out, it was a great segment. And what he's talking about is really how the market, through the indicators he's using, okay, can illustrate whether it's moments of market bottoms, panic, the most important element to find those moments where something may be oversold or overbought that indicates a possible turn in the market. He was coming on with our man Dave White for a long time. He's been coming on with my dad now for, I think, going on a couple months at least. And he's had some great calls in this market, man. I'm looking forward to attending that. So it's Thursday night, 4 till 6 p.m. Eastern time. If you're going to attend, folks, it's going to be within our Discord server. There'll be a special room for anybody that signs up that you'll gain access to. If you're already a member of the Tiger's Den, it's very simple. You're just going to get a special tag on your account that allows you access to that room as it's taking place live. You'll gain access to the archive as well. It's $295. He's also doing a gold trading webinar next Thursday, okay? That is $295 as well. There are different indicators that he uses, folks, but the S&P is on Thursday. That's the one he's kicking it off with, 2 days from today. And please sign up so that we can get you in there. Don't wait until the last second at like 3:57 p.m., 3 minutes ahead of the start, because we do have to get you in that special room within Discord. So head on over there, sign up. You'll be all set for Thursday. And here's the kicker. If you're unsure that you want to attend both, okay, You can attend both for $495 and save $100, or you can sign up for the S&P, pay $295. You can sign up for the gold and pay $295. But if you sign up for the S&P trading webinar, okay, that's taking place on Thursday, you'll pay $295. You can do that now if you're unsure you want to go to both of them. And if it comes time next week that you want to attend that second webinar, you'll still qualify for the discount, folks. We'll send you a special code that you can sign up. So get in there and sign up for that $295 S&P trading webinar, because you can always make the decision for the gold one next week, as well as we'll offer you a special offer code, which will bring you $100 savings if you sign up for the gold as well. But I'm looking forward to the S&P trading webinar, man. He's been making some great calls. We got the market in bull territory up 20%. But what do we got today, man? We got the biggest company in the world giving up some of those gains. And yeah, I imagine it's going to be some time before the augmented reality, right? Headset takes off. $3,500 is a lot of money. If I thought it was worth it, I would try and get that capital to do it, especially when you think about the business enterprise possibilities, or even maybe creating apps that allow some aspects of business, because you can rationalize $3,500 a lot quicker in a business if it's going to make you that money back, more so than you can probably rationalize it just for watching a movie or being the fanboy that gets the first generation. They're going to become a lot better in the years to come. And I think Apple, a lot of the headlines you see is that usually, right, they wait for something to be adopted mass, as in maybe smartwatches, right, and then they come into the market. I think they realize this is such a big deal that they don't mind getting in before it's a mass adoption, and that they're willing to help influence that mass adoption, because I'm pretty sure they see the writing on the wall like Zuckerberg, man. As crazy as it sounds, and my dad said it yesterday as well, who would have thought, if you told us 20 years ago, right, that maybe even 25, because 2003, I think we all had some phones already, but smartphones really weren't happening, right? That's right when the iPhone started to come out. So if you told me 20 years ago, everybody'd be walking down the street, they'd be staring at their phone heads down and not looking at anybody. And if you told us that in 2003, that would be the world we live in, especially the younger generation, not sure many would believe. So is it that outlandish that everybody's going to transition from a phone to a headset? Now, here's the second kicker on that, though. Once you got a headset, you don't need a phone. I was thinking about that, too, right? I mean, realistically, if you're buying a headset, you're wearing the headset all the time. It's just a better interface for everything the phone can do, essentially. So maybe Apple's a little worried about that in the same way, that they got to make sure if there is a transition, they have the product you can transition to, because if there is a product that is going to take the place of the phone, it's going to be a wearable, and it's going to be a wearable that you can interact with. I mean, it's pretty cool that you don't even have a controller of any sort. You're using your hands. It's kind of like that movie. What was the True Crime, Pre-Crime? What was that movie with Tom Cruise? Maybe somebody get me in the den. That was a good one. It's pretty much right out of there, right? Yeah, interesting. But it's going to take some time, man, to put it lightly. And at $3,500, though, they sell 1 million units. That's $3.5 billion. So that'll at least cover the cost as they go through this. Apple shares today, though, slightly in the red. Let's jump around to some of those other magnificent seven. NVIDIA, the AI poster boy, down by about 0.5% right now. Minority Report. Thanks, Dan. Yeah, Minority Report. I mean, it's straight out. If you see the videos of this, I mean, you're controlling it with your hands. You're controlling the screens. You got a vision. You can see through it. Pretty cool how it goes, except not seeing into the future, obviously. We jump to Google shares. Google catches a little bit of a lift, up by about 0.3%. Microsoft shares down about 0.5%. See how Coinbase is trading. They catch a slight bid on the open. Stay away from Coinbase, folks. Stay away. Down 17%. I mean, you want action in crypto, I get it, man. Buy some Bitcoin. Bitcoin up $100 today. Right where it was yesterday after the Binance sell-off. No reaction to Coinbase. How about that, right? No reaction in Bitcoin to the Coinbase SEC. Just remarkable when you put it that way. Crude trading at $71 right now. All right, folks, stay tuned. We got one more segment. We got markets in negative territory. We jump over to the VIX as we come into this break. Nobody paying for volatility premium, man. The VIX dropping to a new low as we got a little market weakness, especially interesting when you look at the sell-off we have going in a company like Apple, in Microsoft. VIX trading lower today, 1454, as we got a little market negative action. Kevin Hincks mentioned it. No real news coming up, man. We got a Fed meeting a week from tomorrow. We got some inflation data this week, but not as important. The Fed seems like they are set to pause. One more segment, folks. Don't go away. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Finishing up the program, jumping around to what else we have going on. If you didn't see it, man, some stark video as you have a Ukraine dam blast. They're blaming it on Russia. Seems like it's on Russia. That's one man's opinion. The Ukraine's Interior Ministry says Russia forces blew up the dam. You got flooding going on everywhere. Some of this water used for cooling for the nuclear power plant they have going on over there. This is a hydroelectric plant, okay? Nothing to do with nuclear, but you do have a nuclear power plant over there, and there's worry in terms of what's going on, and this is quite a moment in terms of how it may accelerate things, unfortunately. And yeah, some pretty stark video when you look at that water and you look at some of the flood areas of what's going on. In terms of the nuclear power plant, yeah, the situation at the nuclear power plant that's occupied by Russia is under control. There's no immediate risk to the safety of the plant. That's what they're talking about right now. But anytime you got war going around, nuclear power plant, man, scary stuff. You got wheat prices jumping on that as grain silos on the banks of the river. Yeah, may be damaged. Ammonia pipeline seen key to grain export deal. Yeah, so things accelerating to say the least. And one more thing back to Apple I found interesting here. The real game changer for these headsets, folks, are going to be when 5G is everywhere. And this is talking to an HTC executive who is in that business, so they're promoting it here, talking about Cher Wang, HTC's CEO. Apple's entry into VR with its new headset, watershed moment, is what they're saying, because that's the business they're in. But rightfully so, they talk about the next watershed moment is going to be when the paradigm shifts and you can wear these anywhere and they're fully integrated with 5G technology so you can wear them around, right? That's going to be the difference maker, because that's going to allow apps that we probably can't even create in our own mind right now in terms of how augmented reality, folks, seems like it's coming and going to be interesting to see. I mean, Apple's got a whole operating system that they built out for that headset. As developers go in there and companies really try and change the game. And you see how it happens with phones, man. You couldn't create half of what you do in your mind before the phone was around because you didn't know the capabilities we're going to have. Once everybody's wearing augmented reality goggles, yeah, things may change. Thanks for starting your day off with me, folks. Stay tuned. We got our man Basil Chapman coming up next. And please check out Tim Ward's webinar coming up on the S&P on Thursday. Check it out on the front page.